See, to get this economy moving again, we have to have healthcare reform, we have to have tax reform, but we also have to relieve our small businesses and entrepreneurs of the regulatory burden. Dodd-Frank represents the greatest regulatory burden on our economy, more so than all the other Obama-era regulations combined. And that's why it's so critical that tomorrow the House passes the Financial Choice Act. Dodd-Frank broke all of its promises. It said it would lift the economy. Instead, we're stuck in the slowest, weakest recovery in the post-war era. It said that it would end too big to fail, but instead, cynically, it codified it into law with the taxpayer bailout fund. It said it would stabilize our economy, make it more secure, but instead the big banks are bigger, the small banks are fewer. Our corporate bond markets are seeing historic levels of illiquidity and volatility. It said, they promised us that it would help the consumers. Yet free checking at banks has been cut in half. Bank fees are up. Mortgages are more difficult to come by. They cost hundreds more dollars to close. But there is a better way. Economic growth for all, bank bailouts for none. It's the Financial Choice Act. It simply tells banks that if you will purchase the equivalent of a privately financed insurance policy against failure, something known as a 10% simple leverage ratio, we'll give you a Dodd-Frank off-ramp. We will replace complexity with simplicity. We will replace bailouts with bankruptcy for large financial institutions. We will throw a needed life preserver to our community banks and credit unions because entrepreneurship is at a generational low in America. It takes small banks and small credit unions to lend to small businesses, again, the job engine of America. The Financial Choice Act cannot get passed soon enough. So once again, hardworking Americans who haven't seen a pay increase since Dodd-Frank was enacted can see their American dream realized yet again.